March 22nd, 2023, there is a pretty big catalyst coming up in the biotech market, and make sure you don't miss it. We already had a big run with PRVB, and we are seeing other biotech stocks take off. So let's jump into it and talk about ticker symbol CDTX. Alright guys, welcome to the trade study. Before I start, I have to throw the disclaimer out there. None of this is a recommendation to buy or sell any stock or securities, okay? And if you find this video helpful, please make sure to hit that like button and subscribe. It helps me out a ton and I greatly appreciate it. So let's talk Cidara Therapeutics, ticker symbol CDTX. We got a priority review on its new drug application for Rezafungin for the treatment of candidemia and invasive candidiasis. And what Rezafungin is a novel once-weekly echinocandin antifungal that's being developed for these serious infections, as well for prophylaxis of invasive fungal infections in patients that are undergoing allogenic blood and bone marrow transplant. So that's actually really exciting. And the once weekly feature is incredible. There's another echinocandin that comes to mind. There are a couple in that drug class. I can use one, for example, called micafungin, that has usually a daily administration associated with that drug, whereas this one is a once weekly administration. So that's a pretty cool benefit for clinicians, for patients. Very cool feature for that drug product. And now we fast forward and we have this PDUFA date coming up March 22nd, 2023, which is just about a week's time from posting this YouTube video. And what's really cool about Rezafungin is that it is designated as a qualified infectious disease product. What is that? It is known as a QIDP. So this pretty much gave the PDUFA target action date. This gave the priority review for this drug, and that they also had an advisory committee meeting already done as well, which I'm going to talk about in a moment. But I'm going to get to the importance of QIDP and why, what is this exactly? And for a drug to be a QIDP, it must be intended to treat a disease listed by the FDA as a qualifying infectious disease. So it has to meet certain criteria. It's related to its development, such as demonstrating potential drugs to meet unmet medical needs and offering a significant improvement over existing therapies. So unmet medical needs, that is always a hot market. That is something that I always push or look for in biotech stocks. There's an unusual high successful rate with that. We saw that even recently with PRVB, with the type 1 diabetic drug that was approved and bought out. So that's usually a good sign to follow. And what this QIDP designation does with Rezafungin is that it provides several benefits to drug developers, including the eligibility for fast track designation with the FDA, the priority review that we saw go down, and also the really juicy part for these drug companies is they get an additional 5 years of market exclusivity beyond the existing exclusivity period. So it adds on, and these incentives pretty much encourage the development of new antibiotics and other treatments for infectious disease, which at the moment is a critical public health concern due to the rise of antibiotic resistant infections. You can visit the CDC. They go into so much detail about that. And well, that's like a whole nother video, the clinical side. Let's jump more into the details of how this is related to the stock. We did see a positive clinical data for the phase 3 and phase 2 trials, which is excellent. You guys can dig into that if you want to see more. And this is very big because if this approval does go through, it could transform the current standard of care and treatment for these serious and life-threatening infections. So we need to talk about that advisory committee meeting that took place with the FDA antimicrobial drugs group, and there is very good news here. The committee did vote 14 to 1 to recommend Rezafungin as a treatment for candidemia and invasive candidiasis in adults, especially with limited or no treatment options. Now, it's important to note this doesn't mean that the FDA approval is coming for sure. You never know with FDA approvals. These are binary events where any biotech stock you're trading can go up massive with very nice gains or come crashing down hard and, well, with massive, not so nice losses. So it's very important to understand that and to measure your risk via appropriate risk management. Also, know your risk tolerance before trading these extremely volatile stocks. And generally, the good news is when the Adcom is in favor and on your side of your new drug product, then you're off to a great start already. For those of you wondering about the specifics, because yes, I've wondered the same thing too, and those statistics, I'll be glad to share them with you. And according to a 2020 study that was published in the journal Drug Information Association, they looked at 145 Adcom events between the years 2008 and 2018. They looked at new drug applications, NDAs, BLAs, biologic license applications, and of these meetings, 79 resulted in a positive recommendation for approval, which is at about a little bit more than half. And in those 79 cases, where the Adcom recommended approval, the FDA approved the drug product in 75 cases. So 75 of the 79 got approved, which is about a 95% approval. Why would they not approve in the other four? Well, it can be anywhere from manufacturing issues to labeling requirements and post-marketing requirements as well. So now that we got that out of the way, this next part is important to note as well. The company did receive $30 million for granting exclusive US commercialization rights to Melina for this new product. So if the drug is approved, CDTX will also receive another $60 million on top of that, and then is eligible to receive up to $370 million in commercial milestone payouts, as well as royalties on future sales in the US. So this is a lot of money we're talking about that could compound into this company, into the stock. And that is why a lot of analysts are looking at this and giving some pretty high price targets that I don't personally agree with, like $4, $5. I am personally aiming for a $2.50 or $3 target. That's more of a conservative approach. But it just does seem like this company will be going away anytime soon in the next couple of years, especially if they nail this approval. Because let's say, well, if they nail the approval, they're going to have all this money coming in. If they don't nail the approval down, they also have other needs that are being worked on. They have oncology, they have influenza needs, other projects in their pipeline, which is something that's always great to look for when deciding biotech stocks. And whenever you want to try to capture a significant move in the stock price and an unmet need, that is a perfect opportunity set up right there. And now to wrap things up, let's pull up the stock chart. Let's see how this stock looks like. It has a market cap of just about 135 million with 82.7 million shares outstanding. You can see it's been in this new range now, and there's been some activity. It seems like it couldn't knock out the $2 level. You can expect this thing to be bouncing back and forth until we get to that PDUFA date next week. That is going to definitely change course, and will give us a better idea of where we're going after that. Now, I did notice that they did an offering of stock recently to raise capital. So they did 17.5 million. And that was before deducting any underwriting discounts, commissions, anything like that, expenses. The number of shares that were being offered was about 9.6 million, with an additional option to purchase of 1.4 million shares. So that's about like 11 million, and that was 17.5 million that was being offered. So I think that came out to about $1.58 per share. How I got that calculation, I took the amount that is the you take the expected gross proceeds of the common stock offering, and then you divide that by the total number of shares being offered, and that should give you the amount. So I am a buyer here at 160, around there. And the plan is to hold on into, unless there's a big run up into the event next week, I will be glad to take run up profits. That's always an effective conservative strategy with trading biotechs. And I am looking for $2.50, $3. I like the risk to reward here, especially since there are some other analysts out there that are saying, hey, $4, $5 is very possible. I think that's a bit far stretch. I'll be happy with 3. And what else do I have to tell you guys? There's really just so much good news about this stock, about this drug product. Even the safety profile, the adverse effects look really good. Not too much. A lot of these antifungal medications have liver issues, and we're not seeing that in this. So it was really hard to find bad news on this. If you're watching this and you were able to find a bearish thesis or any bad news about this company, this drug, send it my way. I'm definitely interested in reading more about it. I had some trouble trying to find the negatives. I see so many positives. I see an opportunity here, a favorable risk to reward trade to take on. And that's all I have for you guys on this stock. So if you enjoyed this video, you make sure to subscribe, hit the like button, stay up to date on any new videos. You could follow me at the Trade Study on Instagram for more content. I'm very active over there. And guys, I will see you in the next one.